Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at the Russell 2000 first. This is the second most active after the E-mini S&P. Now, you notice we've had this rally here from April to where we are right now. Folks, when you're studying the markets, you look at price and time. So you go to see the last time you had a rally that lasted that long. So all you do is you go back and mark it and then check it over, move it here, and it was scheduled to come in today. That's why we were watching this, because it gave us a pretty good idea. Remember, we were looking at the New York Stock Exchange Index making a 135 pattern at the 61% retracement and also at the 78% level. Hold on one second. I'll bring this up here so you'll be able to see it right away. Get this up here so we can see it. Excuse me. There it is, the 61% retracement of the high back here, plus it was 50% of the retracement right here. That made it a perfect one in both time and price. So that's why we were watching for potential for the market to roll over today, because all of these indices have different values and stuff, and that's why it's very difficult. Going back to that pattern that I looked at from 1929, that pattern was broken, folks, on April the 7th when they changed the ideas on the tariffs, and we had that monster day up in the Dow Jones up 2,700 points in one day, actually 4,000 points off the bottom. We had never seen a day like that in my recent history. But anyway, that's the markets, starting to roll back over again. But we were looking for the bottom to come in on April 28th. That did not happen. Maybe this is a top. That I don't know. All I'm doing is looking at these one at a time. Now, what we're going to do now, we finished the Russell. What we're going to do now is we're going to look at the E-mini S&P. Get this up here, and you'll see here today, there was the overnight. There's where we were on Friday overnight. You see we pulled right down to this level right here. That gave us an ABCD to the upside right here. Let's just go to the hourly chart to show you that it's really not that bullish. You see, all we did was take out the highs of the last few days by just a little bit, which is expected, because you're in a topping zone. So that is complete. All right. Now, if we look at the Dow Jones, we'll get this up here. You'll be able to see it. It was even more exciting following the numbers. But here's where we were this morning. This is a smaller time frame. Let's go to the hourly so we can see it clearly. Okay, now there's the number we were trying to get to. Okay, as you can see, there was your 61% retracement right here off of that high way back in April. There it is right there. You go and attack it by just a little bit. And if you looked at it real closely this morning, like what we were doing, let's just get down to that 8-minute chart, because that's what I was watching. This was the opening range, of course. The market broke down, rallied up to the 61% retracement, and then started to drop, and it's dropped 400 points on the downside, pretty much confirming that this is a pretty significant high on the day, given the fact that it was an exact 61.8% move. Now, we can take this off the list right now, and then we're going to take a look at the NASDAQ. NASDAQ is always a crazy one, and you can see here it is over the last couple of days. You can see all we did was take out the highs of the last few days. If we look at this on the long-term daily, all we've done here, folks, is we've taken out the highs of the last couple of weeks. All right. Now there's your distance between highs and highs. Now this is off by 2 days, but by the fact that it's close enough, from our opinion, of where it could be, this is where it's important. The fact that we couldn't even make the 786. We missed it by about 40 points, and now we're down, 300 points from that high. So high indication that this was a move to the downside. Based on the New York Stock Exchange Index, the NASDAQ, the S&P 500, and then also the Russell. Okay, now let's move on and make sure we catch one other one. This is the one that was the most interesting to us today, because let's just get this up on the smaller time frame of the hourly, because we were watching this last night and we had as our trade of the day to be a seller up here at this level right here at 10, and we did. We sold it right here at 10. It came all the way down. Now this is telling you that the bonds have actually turned up, folks, because on this pullback, after having almost $900 profit in it, it pulled back, stopped exactly at the 382 here. At that point, you had a $900 profit from where you are right now, and now it's starting to move up. You know, I've been very bearish bonds for quite some time now, but as we look at this on the weekly chart one more time, you can see this bearishness down here. We're already above the 382 in just 3 days of trading. That's telling you that the bearishness has dissipated somewhat. And the reason for that is if you go look at the Treasury notes, we're going to look at that right now so that you can see the difference between the two. And we'll put this up here so you can see it real quickly. Doesn't look nearly as bearish, does it? No, it doesn't. There's the daily. You can see here it didn't back off nearly as much. And look where we're going right now. That's telling you that the interest rates are starting to drop again. And we're going to find out how much they're going to drop by watching these notes and the bond. So that was the real key today. The fact that that bond can only make a 382 retracement. At that point, you had a $900 profit in it. Let's just get this up here to reiterate that, because there was a sell right up here, and then there was your 382 coming in right there, right at the money. So that was telling you that something really important was happening. And at the same time, the stock market's dropping. So maybe this is a flight to quality, but you know, it's a little early to really tell whether that's going to be the case or not. So there's a big divergence here, and now it appears that the bonds have some more room to go to the upside, so we have to stand aside. Now, we had a couple of really interesting trades on this morning that worked well. One of them worked pretty good, and that was in the we had one here in the, let's get the crude oil right here. We had a beautiful ABCD pattern right here in the crude oil. We'll just put it in right there. And there's where the buy was right here. It went from 62.60, it rallied $600, and then boom. Now, after you buy it here, folks, you've got this much profit in it. You got to have a stop in here somewhere, especially when you have a move like this. As the market broke down, you can see it didn't have any friends at that point. And at that point, what you do, you get a really nice rally. Not as big as this one, but where did it go? Right to the 382, telling you that it was getting ready to go lower, and it's still going lower down here near the 1.618 expansion now. So this would have been the worst as a break-even trade. At best, you would have made a little bit of profit. There was a small ABCD pattern right in here, and it was in the midst of a downtrend. So, well, that would have been there's another 135 pattern too. There's 1, 3, and 5. Let's just double check that one for health. We'll be right back, folks. Oh, look at that. Boy, that's just about spot on, isn't it? Holy moly guacamole. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Folks, I've got several things to cover, but right now we're looking at something that is spot on, so we'll take a look to see if stuff really works or not. This is the natural gas. And as you can see now, we're making a 382 retracement from the high we made way back here on the 9th. There it is right there, folks. You can see this morning we had a perfect 1-3-5 pattern. Look at that. Just 1-3-5. Higher bottoms. Boom, bang, boom. Folks, that's a $2,500 move with a margin of 2,900. You can't ask for anything. Look, we're really close now. We're only 2 points away, 336.40. We're 2 points away from the 382 off that high, way back there. So that should be some pretty strong resistance, okay? Now, this is a pretty strong rally. We've come from 30. We rallied 34 points. On this one right here, what did we do? We rallied 50 points, so it could even go that high. You can see that was a big one, and now we're almost at the same level. Let's just double check that for kicks and giggles to see how close it is to being the same. I can see it's not, because it could easily get up to this level right here, but we're there. You can see it, and it's trading a tick at a time, so it's not exactly, let's just get this up on a smaller time frame, say 8 minutes, and you can see it's just going up a tick at a time. Oh, there it is. There's where it's heading. See, the number we're looking at is 36. So let's just look at it on a really short-term basis, okay? We'll put the old clock on the wall to see what it comes to. Now, there's the whole day's range, basically, from early this morning. We've been going on for 4 hours, and you can see we have several ABCD patterns. Remember, the number that we're waiting for is right here. That's the magic number, 336. So we're going to look at it right here. There's your ABCD right there. Where does that match it to? It's 36. Okay, the next one right behind it. Put that one up. See where that one goes to? It goes to 36. So there's your spot right there. You don't have to risk very much. I'd say $3 or $300 would be your maximum risk. To 339 is what I'd be doing watching this. Now, if we were to draw it out easily, we'll just get this out of the way, and then we're going to draw it as a 3-drive pattern, because there's drive 1, okay? There's drive 2, and there's drive 3 coming in right up in here at 336. We're at 334. The high so far has been 335.20. Boy, that's pretty close, isn't it? Shut the front door and raise the rent. Let's just see how that works. We'll keep the beeper in, see if the order gets filled, and then we'll put the stop in, and we're going to find out whether it continues to work or not. Now, let's get back to a market that's really quiet and has virtually no activity. Hello, operator. Let's talk about the gold market. This is one wild puppy, folks. Last night, Sunday night, you can see here, early Sunday night, it opened at the exact 61% retracement of the high that we made back on Thursday, okay? Shut the front door and raise the rent. Just a minute, let me draw this down there. There it is right there. She opens right there, has a strong break, goes right to the 382, folks, and drops $50 straight down and matches this low. Didn't take it out. Then it comes up and rallies a little bit to the 50% level, then backs off, and then here's where it all changed. You see this A, B, C, D pattern here coming in right here? This was, just remember, this takes several hours to do, and a gold market's a big market. What this does is it sets up an A, B, C, D. Now, the reason why it's important, remember, if you're looking at these overnight, it's very important. If you're just looking on a daily, it probably doesn't mean very much. But if you look at the number of times the bar goes down, it takes 2 hours. See that? From 4 to 6, okay? 1 to 3. So it takes 2 hours to make this low. That makes this an A, B, C, D. And look what happens after that. Market takes out this high, makes another A, B, C, D right here. And then when it takes out that 50% level, away it goes. Makes a 382 retracement right here. We'll just draw this in. You'll be able to see where it is right now. And there it was right there. Remember, there was another half-hour break, 45 minutes, stopping right there at 329, and then back up again. What's this telling us is if we look at that hourly chart, we got a little bit more to go to the upside on the gold. Because, look, there's your high back here, 3509, okay? All we've done is made a 382 retracement once, 382 retracement twice, and we're getting ready to do it again. 382 right up here around 336. 362. So that's what we're watching here as we're watching the gold market here. Now, silver is just tagging along. It's not really doing very much at all. So that's the reason why we're watching it very closely, okay? So that's what we're watching here in the gold. Lots of action, lots of volatility. But remember, we are down, okay? We're down $300 from the high. Is that correct? 305? No, $270 from the high, all right? So that's a pretty good, but we had those before. We had a $270 break right here. See? So it's the same thing. We're just doing the same type of thing, just a little bit greater volatility. Okay, now let's get rid of the gold market. Someone's asked to take a look at the silver, so we're going to do that for them right now. This doesn't take very long at all to bring these up. And I want to share with you one other thing that I think is important. Well, it's important to me. Oh, dear. This is what we call a bad tick, folks. I got to get rid of this. This is no good. It takes a while for them to correct it. You can see silver has still not even approached those old highs. All that's done is made a 78% level off of this last rally, but it's actually holding up. You can see still down on the day, but had a pretty big correction actually on the day, and now it's still down on the day. Okay, now let me go over and get out of this and show you something important, folks. This is important. This is from the Chicago Mercantile Exchange. Okay, this is their daily volume and open interest chart. Now, this is all the things that are available. You can see where the volume, how the open interest is dropped and the volume is dropping. That's a really bad sign. Now let's look at something that everybody trades, which is the stop and P. We'll get this up here, right here. There's your mini S&P, and we're going to get that up, and then we're going to hit the volume and open interest, and you're going to see something that is, I think, pretty important and amazing. Okay, now this is the actual volume and open interest. Okay, now I want you to see on Friday, you see that big up day we had on Friday? Open interest dropped 13,000 out of 2 million. Let's go back and see the day previous to that, Thursday. The open interest dropped 3,500. This is telling us, folks, that with open interest dropping and volume dropping, people are leaving the market. That means that it's weakening. And today, you might be seeing that weakness finally starting to pick up. But look how the volume has dropped off. something is. This is where we had that big up day, that big crazy day, the 5th and 7th, a huge volume on those days. And that was a relatively bearish one. But anyway, that's what we're watching here. With that, I check these each day just to see where we are with some of those. I do it with gold, and I do it with anything that's making, unusual moves. And those moves we had in the stock market last week were incredibly unusual, but the market didn't respond to it. See, it's starting to roll over, and that's not a very good sign. At least from looking at it from my perspective as we're watching some of these. I'll just take a little break, and we'll be back, and we're going to go over some grains, folks. We got some good information coming from a reliable source, and we're going to check on some grains.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to take a little time here to tell you a little story. 9 years ago, my good friend Rich Anderson sent me an employee he used to have was Cy Monley. And Cy at that time was a hedger for millions of acres of corn, sugar, soybeans, wheat all over the world. And he later on sold his company to Farm Bureau, and he's running their operations now. But as you can see here, back here in 2016, we had sugar setting at 23 cents, and that's when I first met Cy, and he was incredibly bullish. He said sugar was going to go to 50 cents, and I said, well, Cy, I'll tell you what, I don't think it's going to get to 24 cents. And you can see here, this took several weeks. We'll just spread this out a little bit here, and you can see there it is right there. It took 3 weeks up here at around 23 cents, and then it started to go down. I said, well, if it goes to 21, I said, would you believe that what I'm looking at is correct? He said, yeah, I start to believe, but he was still skeptical. Well, you can see what happened. He became a real a proponent of pattern recognition later. I'm going to tell you the story behind that because he is in something right now that I don't trade, but he asked me to look at it. So we're going to do that together right now. We're going to look at coffee, and this is technical stuff, folks. I don't know diddly squat from coffee, as you know. Well, I don't hardly ever drink it. Okay, here is coffee on a long-term basis for July. Now, we made a high up here at 430. Then you can see we made the ABCDs. It came down to this level right here. Then we have this ABCD that's forming right here at 413. The high today has been 411.30. So this, to me, he asked me what my opinion was. I said, as long as it doesn't get above 415, we'll say 418, I said it's got a chance to turn lower. We had the 1-3-5 pattern. Just move that up to, well, you can't see it there because I drew it wrong. There's your 1-3-5 pattern, and now we're making an ABCD pattern right here. You can see there's the 382. There where it is now. This is the spot coffee. Spot coffee's trading for 410. Okay, now he's not in spot coffee because he's looking at the new crop coming out. We'll get rid of this, and now we're going to look at December coffee. This is how these guys like Rich and Cy handle their stuff. Now you can see right now December coffee is already taken out the high. You see that? There it is. There's your ABCD right here at 97, and the high today has been 94. So it's only 4 cents, 3 cents away from a new all-time high with this ABCD. So there's a divergence here. Now, what we're doing now is we haven't got the data yet, but we're checking to see what's happened to open interest during these last 3 days. So if you get a sign that the open interest is dropping, okay, and that means that the players are leaving the market as it's making new highs, this is unsustainable. And that's what I did in gold, and it was sustainable. That was one that didn't work very well, but that's the way it goes. Anyway, these are the ones. I'm going to follow this just to see how the ABCD patterns work for us, and that's really what we're watching to see if we can get that taken care of. Okay, so those are the main things that I want to be watching. Now, there's one other thing. He has a huge artificial intelligence network of guys from MIT that work with him on different things, and one of the things they're working on are weather patterns. And he's noticing weather pattern. They're noticing bullish weather patterns that could be happening in the grain markets. And so he said, let's keep an eye on that. And I said, I certainly would. So first thing I did was, I wanted to share with you this morning, is we'll get this out of the way, not to worry about this anymore, because we won't be seeing that for another couple of days. Get this out of the way. Well, I see we broke below $5 now or below 5,500 now in the S&P. Means we're still heading a little bit lower here. So far, the high that NASDAQ or that natural gas has only been 335.40, so it might have missed that 336 level. We'll have to wait and see. Okay, let's get back here. Let's take a look at Christmas corn. Folks, this is the stuff that's planted right now. Most of it's planted, and it'll be as high as an elephant's eye on the 4th of July. Now, this is new crop corn, okay? And as you can see here, we've got some type of a bottom happening here. There's your low here, there's your low here, there's your low here. Now it's making a little bit of a pullback here today at this level. The corn low is in my opinion. I think this where I would be looking to be a buyer. We almost made the 61% retracement here, but I think it's got a chance to go to the upside. Anything down in this area here, if it drops 20 cents, it's no good at all. But it's got a chance. Folks, corn used to be as high as $9 or $10. We're half that price right now. So there hasn't been any inflation in the corn market, that's for sure. All right. Now I want to show you one that I really like. Let me get this up here. And then we're going to get to cookies and cream and pasta. Hold on one second here. Uh-oh. Don't tell me you left me. You did, you little rascal. Hold on a second. Where's the wheat? Shut the front door. I'll pull it up. It's probably right on the B right here. There it is right here. There's Christmas wheat. We want to get up here and take a look at it. All right. Get this out of the way. I don't want to do weekly because that's a little too much. Let's go down and we'll look at the daily. There's what we want to watch. Here's our daily here over the past several months. We are coming close, folks. One thing I can 100% guarantee you, folks, people are not going to stop eating pizza. They're not going to stop eating cookies and bread and pasta and stuff like that. So wheat is something that is a staple. It's been around for thousands of years. It's not going to change. If you remember going back here a few years ago, let's just pull this up on the monthly and you'll see. A few months ago, it was, well, this is December, so it doesn't have enough of the data. It was $13. Let's just see if we can refresh more. No, you can't because this is only December. It doesn't go back. You'd have to do the wheat. If you remember, wheat was $13, folks. $13 a bushel. When it gets to $5 a bushel, nobody wants it. So let's look at this again on the daily because this is the one I like the best. Okay, here's what we're watching. We've just made new contract lows today, all right? So that means we're trading here at 68. That means there's going to be some support here, I believe, at 551. That's down 20 cents from where we are right now. So there's your 1.618 expansion. So I'm going to be a buyer here. Let's just put this in here at 553. That's down 19 cents from where we are right now, 553. And I'm going to put a stop in at 533. Okay, I'm going to risk 20 cents to be a farmer. That's $1,000, folks. I'll tell you, we've been down to this level before, around $5 in the wheat. Remember it goes 501 or 512 back on one of the other contracts, but I like this one very much. We're coming into the growing season, and this is why we want to be watching this very, very closely. All right, and let's take a little break. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, let's take a look at the cattle market, folks. This is a really great market to trade. You notice we had a 78% retracement. We had that really nice 3-drive pattern here. We didn't get filled. We thought we were going to get to there, but we didn't. Then it had the break. Now we're up here again, folks, 210. I'll give you a little story. When I was at Drexel back in 1976 through 82, in 78, the cattle reached $1. That's way at the bottom of this, $1. And there was you folks don't remember this because it was so long ago, many weren't even alive. But 40 years ago, housewives went on a hunger strike on beef and at $1, okay? And it broke the cattle market. It broke the cattle market about 20 cents down to about 80 cents. Now we're at 210, okay? You can't find a housewife anywhere. They're not even complaining. So this is a beautiful ABCD pattern, as you can see, forming right up in here. You can see we had some resistance here, 207, resistance here. Here we're at new high ground. Now, the one thing you want to be watching is you want to be watching the open interest, because if you see a change in open interest up in here, it's telling you that the buyers there might be a few people not in the market, so you want to be able to see what's happening. You have to go to the CME website, type in live cattle, check on June cattle, check on August cattle, and that'll give you an idea if you're watching June and August. Those are the ones you want to take. In fact, you should look at all the options, but June will be the lead option, and then there'll be June, and then August cattle, and then also October cattle. But there's where we are. We got an ABCD pattern coming in right here. Now, let's look at this in the way of W.D. Gann look at it. He used time and price. We're looking at price, okay? Let's look at time. From the low that it made right back here on March the 4th, the market rallied and made a high here 14 days later, okay? Right at that level. Now, you match the high right here. You can count either one of these, but we're going to see if it matches up to what we've got right now. So we'll just move this up like this. We're going to bring this over, and we're going to go from low to high, and that tells us that we should be making a high here, right here on Monday. This is Monday where you'd be watching, because this took that many days to go up, and this would be equal to that right here. Now, time is more important than price, but I'm not really good with the time part. All I'm doing is basic counts. We're up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. The number of times that happens is very rare. you can see it does happen, and it does go higher, but the action here is what I want to be watching. How much do I have to risk to see if this price level of 210.15 is going to be right? Now, it's trading at 209. That's only $400 away. The high has been 209.82, so we're right near the high. Just looking at this on a smaller time frame, we're really near the high. We're most probably going to get here. So since it's late in the day today, I will be watching this tomorrow at around the 210 level. That's exactly what I'm going to be watching. Maybe a little bit higher. Fact is, what I'll do is I'll just look at this on a 60-minute to see if there's a little squirrely. Now, if there's nothing here at all that I can see. So 210 is what I'm going to be watching for in the cattle market tomorrow. And we've got to, that's nothing. That's 60 cents from where we are right now. So I won't touch cattle till tomorrow because it's going to close in about an hour. But tomorrow's where I want to be watching. And probably, folks, the best trade would be to let it hit the high, back off, and do the 382. That's what you should do. But as amount of risk that you take, that's what's important. What I want to find out is, like, you see how we went sharply higher here? We haven't gone sharply higher here. It stayed here. We're only less than a penny away from where we were 7 days ago. So there's not a lot of buying coming in here, folks. This is not a risky trade. You can see there's where we were. Here's where we are. The difference between 208 and 208.37 is $250, and it took 6 days to do it. Well, this isn't a runaway market. It's not like coffee. Not at all. So we got a shot here. Watch that tomorrow. We'll see if that's going to work. Okay? All right. Let's get back to where we want to talk about some of these other things that we're watching. We've talked about the wheat. Let's talk about the soybean meal. This is the one that we've been watching. We bought some of that, had a nice profit in it. It ended up being a break-even trade. It's back now to what we originally sold it for or bought it for was right here. We're right there right now. The stop would have been here at 294. So you're still in that, and it's basically at a break-even, and it's down 1, 2, 3, 4, 5, 6 days. Big ABCD to the downside. This is the test. I really like the long side of meal, folks. And I think the reason why it's going down is because of the price of the soybean oil. Let's get soybean oil up here and take a look at this. This is one of the trades that we had on for Friday, is we were trying to sell soybean oil right there. Let's put the daily up so you can see it here. There was our main sell right here on Friday. We missed that by 30 cents. The market broke down, and then what it's doing today, we're just going to put it back up again. We had a nice move down. You can see we'll put that in there. Well, it looks like it's a 382 off of one of these major lows back here, probably this one. Let's check. Yeah, there's your 382 off the last major low that it had. So all we've done now is match the 786. Now, I'm assuming that they're going to start selling soybean oil and buying soybean meal. That's known as the crush. And so I'm waiting to see if that happens. So let's take a look at soybeans themselves. We're going to come up here, bring this up. We'll look at them on the face of the AI. I haven't looked at that at all today. We're going to find, haven't even put it in. So let's just double check to see where we are. Put that in right here. And, there was it was a pretty good fit, but now you can see, it came down, made the bottom, and now it's drifting lower as expected, but it's still very strong here, folks. Let's look at this on the daily. You see, there's nothing bearish about this. We went above the 786 here. Can't hardly back off at all. So what you want to be doing is get ready to buy the pullback in soybeans. There was your first move right here. Okay, we got higher bottoms. We're in the midst of the growing season. Shut the front door, folks. Look when these things top. Look at June where you were. You were $12. Where are we at now? We're at $10. So, this is the time of the year when this stuff starts to rock and roll. Now, last year, you see, was making a low at that time. Okay, this year, it's going to be probably making a high at this time. That's why the weather patterns might be changing enough to get you to this point where you could easily get it moving. So let's just look at this real quickly here, because this is a big move here. That's about a $5,000 move in soybeans in less than 2 weeks. So what we'll be watching here is to see what the 382 retracement is. I'll be surprised if we get any less than that right here, folks. So watch 1030. in July soybeans. But you should all be watching November soybeans, because November soybeans are the new crop, and they're just being planted. So it should be a lot cheaper price. Oh, these turkeys. I got to do the 4-hour second. It's got a bad tick. We'll be right back. Hold on. There you go. There you can see the difference between November and July. Okay? That's, yeah. Okay.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Okay, folks, we're going to look at 2 unrelated markets. They're just charts, they're just patterns. You can see this trend line in the once it gapped above that is very, very bullish. Okay, that's Tesla. Let's take a look at November soybeans, which is new crop soybeans. They trade for 50 cents a bushel cheaper than the July, because they're supposed to bring in a lot of soybeans this year. Now, you can see there's a downtrending line right here. You could even move it over a little bit to match it up even better. They're supposed to be hitting those exact spots, like right there. So once we get above this level right here, it's going to be quite bullish. So I'm going to put my little beeper in here. We'll alert everybody that you certainly want to be watching. I frankly would be buying on this pullback right here today. you'll see you'll just made a 61% retracement here today. We're sitting right over a exact 618 right here, so your risk is really small. And what do we have today here? We have a new moon today, folks, and these things work pretty good with the lunar cycle. So that's what I'd be watching here. Let's just, for kicks and giggles, we'll put that in right now, and we'll check the moon phases to see if new moons were. The problem is this is a 4-hour chart. Here's the last time we had a new moon, which was right back here. It was 2 days off of that high. Let's move over. That's a quarter moon. That's the other one. Let's see. The problem is it doesn't do it well because there's just not enough. There's the full moon bottom right here. Let's go over and look at another one. It just doesn't do it on. You have to do it on a daily because 4 hour doesn't really work very well. But I'd be buying November beans here today, folks, with a stop below here. You're risking about a nickel, $250 to be a farmer. Stopped at the 618. Looks pretty good to me. And there's your nice ABCD to the downside. Lined up pretty good. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow.